Folks, there's been some very interesting developments on Wall Street. I still don't know if this will happen or not. We're still in speculative mode, but it's time for you to understand basic analysis of takeovers, and this is a perfect example, especially in this climate right now. So let's get into it. According to Wall Street Journal, it looks like Uber, ticker symbol UBER, is looking to take over food delivery competitor Grubhub, ticker symbol GRUB, in an all-stock deal. While Grubhub has not commented, investors, well, they're very anxiously waiting to see if this is in fact true or just a rumor, and what type of impact this takeover will have on Uber stock. Now, on its face, the takeover makes perfect sense. Uber's seen a massive decline in its main business model since COVID-19, which has led its focus on Uber Eats over the past few months. And since food delivery doesn't seem to be going away anytime soon, it appears that Uber wants to add some major market cap under its belt. The industry is expecting major consolidation. Even Grubhub said so. So Grubhub consolidation in the food delivery industry makes sense. That's exactly what they've said. Investors seem to be excited on both sides. Uber shares, well, they rose almost 9%. Grubhub rose as much as 35% over the possibility of an all-cash takeover deal. Grubhub once had a firm control on the meal delivery market, but has been steadily losing market cap to DoorDash, which currently has 42% market cap. Individually, pay attention, this is important, Uber Eats has about 20% market cap and Grubhub has 28%. If the deal between Uber and Grubhub goes through, Uber Eats would have 48% market cap, essentially making it a leader in the industry. Now, what I like about this possible deal is the fact that it's a win-win for both sides. Grubhub has been struggling to keep its bottom line higher in recent quarters. The food delivery space is extremely competitive since the only major factor that separates competition is price. Thus, combining the two meal delivery businesses would provide scale that both Uber and Grubhub need right now. For example, Grubhub, well, they dominate the New York market, which would be a wonderful addition to Uber, since Uber biz model is only stay in markets where they're either number one or number two. This business model worked for ride-sharing services, and they're trying to utilize it for Eats as well. Eats has been a top-line hedge for Uber in recent months. The pandemic is keeping the world at home and leaving rideshare businesses idle. But Eats has been heating up. Boy, has it been heating up. Year-over-year boost of first quarter was up 50%, and I'm expecting second quarter numbers to continue showing strength. If Uber and Grubhub can settle on a deal, it'll completely transform the food delivery market. Uber Eats would have the scale they need to beat out its competition and will help turn profits sooner than initially expected. Technically, Uber looks to be at a good trading value, crossing the 200-day moving average at this time. Price broke down below $15 during the April pandemic, but bounced back and quickly recovered about 2/3 of its value over the past several weeks. With the potential upside as a result of the buyout, I'm not focused on Uber stock even more, since this deal would make the company an instant leader in the food delivery space, which would only boost Uber's edge out in scaling their competition to gain advantage in the industry, which would cause overall increase in market cap, valuation, and share price. All in all, this buyout will benefit both companies and their shareholders tremendously. And hopefully the two companies will come to an agreement over the very near term. Hope that helps. Keep your eye out on Uber and Grubhub for the foreseeable future. There may be a deal in the works right now. Folks, there's just no other way. There's no way around it. There's going to be a huge spike. There's going to be a surge of post-quarantine spending as the government reopens. And that $2.2 trillion in stimulus money, it's going fast. We're likely to see some huge spikes in specific stocks. Luckily for you, I've predicted which stocks are set to skyrocket due to this influx of retail capital. In fact, my number one pick it's still climbing today. And that's why this Friday, 1 p.m. Eastern Time, I'm hosting a training event to teach you how to cash in big on my latest post-pandemic moneymaker. Don't wait to cash in on this unprecedented wave of post-quarantine spending. Click on the button below to reserve your seat today. Don't miss out.